So the trading takeout today is, how does activity in the Asian session, or more specifically, Asian equities, relate back to risk sentiment generally in global stocks or risk or equities? And I think the key bit here is naturally that the Asian session is occurring before, the European New York sessions. This means that there is a barometer of risk sentiment that we can take from this. So in the FX world, it tends to be that when the Bank of Japan comes and does something overnight that's quite drastic, that sets the tone for the rest of the day. I think in the context of what we're speaking about just previously with China, that's very more an isolated issue. It's very China specific, I think. And you can see that because at the same time, the Nikkei is also higher. Now, if the Nikkei were lower over that time period, you would expect, general risk sentiment to be worse when the US opens. But you can get a gauge of risk sentiment, of course, and understanding of what's going to happen in the US session from ES futures, for example, or NASDAQ futures, because they trade overnight. But that doesn't necessarily mean that there could be sort of a negative waterfall on price. So you really need all the equity indices to sell off or gain at the same time to have a broad-based understanding of where the US might be when the market opens. And I think that understanding the nuances between, what is occurring versus one stock market index versus another is absolutely key. And, the perfect example of this is understanding that probably there is some influence from Trump becoming the more likely presidential candidate versus, a broad-based equity sell-off. So the context of today's trading takeout really is related to the previous video, which is that China is currently in a spot of bother in an isolated format.